All right, all right, all right. What's up, everybody? Yeah, Wednesday. Hope everybody's having an amazing day. It is hump day. It is time to kick it off here with the daily market commentary. Welcome, everybody that is joining us in the live session. If you're watching on recording, do me a favor, leave a comment down below. Say hello, all those fun things. We do each and every day, identifying 10 to 12 futures markets from an educational perspective. Jason, all right, yep. It was quite the day yesterday, Jason. There was a lot going on, so we're going to dive into that right now. Starting with the S&P. Now, I had a great conversation yesterday with somebody, and he asked, "Why do you look at the same markets every day? Why don't you vary it up, and why don't you look at a bunch of different things?" And here's why. Let me tell you why. The reason I look at the same markets every day is because it allows me to keep the lines on the charts. And the reason that I keep the lines on the charts is because a level that I looked at days ago might become valid and might be a good level when we have a big whipsaw move like we had yesterday, right? So, and that's kind of what we saw happen yesterday, interestingly enough. So we had this area here, which we talked about as a potential breakout zone. And we did get a little bit of a breakout. 1, 2, 3, 4, 5, 6 candles later, we hadn't really gone anywhere. So after 6 candles and not really going anywhere, now, by the way, our stop was down here, but after 6 candles and not really going anywhere, what are we supposed to do with our stop in that scenario, right? When we think about that situation, we've got a very, very strict rule about what we do with our stop losses. And that's the reason why we have that 6 candle rule in place. We take our stop and we move them to break even, okay? Now, this is frustrating because you have a really, really nice strong run and you're up 20 points in this move, essentially. And then, yeah, it's either move to break even or just get out of the trade. So you're up 20 points in this move, and then all of a sudden we get the Trump tweet kapowie, which drives it straight down. Now, we drove it straight down to the end of the day, but then from the end of the day, we hit our other demand level and then came right back up. Now, we blew through our hourly level. And came back into this little 15-minute area here before then coming up out of that zone. Now, I'd imagine most people are not going to take that at the end of the day against that kind of momentum, but that level was very strong, and it hit in the S&P as well as in the Dow Jones. So both levels hit at the end of the day. Did give you a good opportunity to get long. But what am I looking at for today? Well, after the news yesterday came out that said, hey, we're not going to look at a stimulus until after the vote, which, good, bad, or indifferent, whatever your thoughts are on that, I don't really care. All I care is what it did to the market. And this is one of those kind of moves that the market gave us a whipsaw back down, okay? Yeah, I agree, Liz. Time of day was really tough on that. So I don't think if you didn't take it, certainly, don't feel bad about it because it wasn't a great time of the day. No question about that. So looking at what we see this morning, our 4-hour trend, what direction is our 4-hour trend? Our 4-hour trend is still up. We've not changed our overall bullish bias, but this is what we call price shock, right? Price shock is an important factor. And when I start to see price shock, which is a candlestick that's a candlestick of the opposite color than my predominant trend, essentially, right? A big red candle in an uptrend. So is a big green candle in a downtrend, right? That would be considered price shock. And so while we're in this situation where there's price shock, taking a look at, we'll throw RSI on for right now. We saw that big sell-off with our bit of price shock, and we are kind of still in between overbought, oversold territories on this one. If I look at the MACD, which is usually a bit slower on the responsive side, we do anticipate that when I look at these swings, swing low, I've got my last 2 swing lows in the MACD. And I've got slightly higher swing lows in price. So that shows me that there is a bit of a slowing of momentum, but it's not a terrible slowing, right? It's not it's not slowing so much so that I'm gonna change my overall net bias, and so I'm gonna maintain that bullish bias until proven otherwise. So the first place I'm gonna look for tonight or for today, um, I like this area here from a structural standpoint. I don't like the time of day that it was created. The time of day that it was created is certainly not going to be a great time of the day. But the structure is pretty sound on this little move. So because of the time of day being not the best time of day, we would look at this area right in here. Hello, Chin Jasmine. So Jasmine, what I would say about good times and bad times, it's going to be, it's really going to be right around market open. Market opens are always going to be our best times of the day to trade. Now, I talk about US market open as the strongest, but then the London market open as the second strongest. I think that the London market open would be that second strongest time of the day. So I like market open time of day. Those are the ones that give me, I think, the best opportunities. And then you're going to talk about, you kind of rank them, right, between those. And then, after the different times a day would be, whether the market's open or whether the market's closed. And all of those pieces are going to be important in determining, when I should trade. I think I have a video somewhere. I'm looking at it over here about what best time of the day. And I don't think I thought I had a video on it, but I guess I don't, on exactly what time of the day to look for trades. But essentially what it comes down to when we talk about time of day, it's going to be the best time of days are going to be right around market open. The second best time of day is going to be the U.S. market open, and then obviously third is going to be around market closes. And then last but certainly not least would be Globex sessions, right? So Globex sessions are going to be probably the least strong. And for me, it's in the top video. Okay, thank you, Vcast. For me, the worst time of day is between 5 p.m. and midnight central time in the U.S. Between 5 p.m. and midnight central time in the U.S. is the worst time of the day. Which puts this right square at the end of that, right? So technically the Asian markets are open, but no other markets are really open. Asian and Australian markets are open, but the European markets haven't quite opened yet. And so they're not helping to kind of buoy, and that's why this level's a confirmation entry. Yeah, that is true, Liz. Being right around the pit close does give it a little bit more credibility in that area. So I think it's a pretty good level, and it's okay. It's clean. Correct, Dennis. Asian markets have the lowest volume, and primarily because the Asian markets don't trade the U.S. markets as much. I will say, interestingly enough, we could have prices popping above here, and we're just getting above this area here, which could certainly act as resistance. It's not an official breakout point, but we definitely saw that it was a turning point before slicing through it. And so we could see that this area here becomes pretty impactful. It's not an official breakout because I don't have 3 touches. So I think it's okay if we look at this as a potential area. If we continue to rally up, you might even start to look at this little zone right here that was just created on a 15-minute chart as a potential reversal point. Yeah, and those big speed candles, you're correct, Dennis, they do tend to get retraced. So in reality, we should probably put a little supply area up here because those big speed candles do tend to get retraced. And if they don't get fully retraced, they typically get a 50% retracement, right? So a 50% retracement would be right about here, 33.90. So just kind of keep that area in mind. We could see some weakness up in there. I will say that right around the open could get a little bit volatile, so just be aware of that. Moving over to the NASDAQ. So in the NASDAQ, very similar picture. Price rallied up hard after the close yesterday and has been going up all night in the Globex session. We're almost back to a level here of kind of a controlling price line right through here where we've been vacillating around. If you look at the 4-hour, on the 4-hour chart, we've been kind of rain bound, right? Yeah, it was definitely the tweet calling off the stimulus that made that move. And so, but news driven candles are still candles worth paying attention to. So looking here at the 1-hour time period, I don't like this level as much as I do in the S&P. In the S&P, I think this level's a bit cleaner. It does show up in the NASDAQ, but it's cleaner in the S&P. If you go to a 15-minute, you could look for a little retest of this 15-minute area right here, 11,340 by 11,326 as an entry. Very small time frame for a little reversal trade. Marcus want another hit off the crack pipe. Well, that's a good way to think about it, Dennis. Now, the Russell yesterday, the Russell did give us basing there just in front of the level, gave us a breakout, and it came right to supply. Now, that supply level that we came into, I got to go all the way back to here at this wick over wick hourly supply level just below a pivot high. And the market hit that wick over wick hourly supply level and sold off from that zone really hard. Now, in reality, you probably didn't get filled. Why would you probably not have gotten filled on this level? What's the reason why? Yes, the level worked out extremely well, but I'm not going to say that I got filled on that trade because there's a reason that I didn't. Somebody tell me what that reason would be, because there is a real reason why I wouldn't get filled on that position. And by the way, it looks really good for me to say, hey, look at how well our entry worked. But in reality, if you're following the rules, you didn't get filled on that. Very good, Sonia, Tom, Liz. It's a confirmation entry. Now, why is it a confirmation entry? Because we trade using a trade optimization plan, which tells us that it would have scored a 0 out of a possible 2 in our trend following, which scores an 8 out of a possible 10. That takes us from a 10 out of 10 to an 8 out of 10, which means that it has to be a confirmation entry. And I'm not going to break the rules simply because it worked that time. I'm not. I'm going to stick to my rules, and they're going to be followed. And the longer that I do that, the more consistent I will be. You know, the way I think about that, if you got this, and price hit your level and moved away, here's the way that I think about it. I coach baseball with my 6-year-old and 8-year-old son. And my 6-year-old son, my 8-year-old son, when he was younger, got into a habit of when he would swing the bat, he would get his arms out perfectly straight and swing with his arms perfectly straight, because he knew that if he did that, he could reach longer with the bat and he would make contact. And he knew that he would do that when the kid that was playing pitcher couldn't throw him out at first base. He would only do that because he knew that he would get on base if he hit the wrong way and just made any sort of contact at all and could run it out. And yes, it sometimes worked out in a good result. But overall, what that will do is that'll teach him the wrong habits, right? That'll teach him the wrong habits and the wrong way to do it. So just because you get the outcome you want doesn't mean that everything was right. And that's what this is an example of, right? This is an example of the fact that we have we want to follow our rules. So Larry says, why not a dashed line? Well, because it was an old level, Larry, and I just didn't change it. I don't change them all the time. That's just one of those ones that's kind of a known rule, and that's why it's not as a dashed line. Because theoretically, what I'd have to do, since I leave all my lines on all my charts, I'd have to go back and change every one of these lines above me to a dashed line, because they're all confirmation entries at this point, right? So the rule is essentially, you know, we want to stick to that trade optimization plan, which tells us when something's a confirmation level. It's because of the rules that we follow, right? That's really the main reason. Jason, I think Trump did get a call before he made that tweet. I actually called him and asked him if he wouldn't mind letting the market go just a little higher so our confirmation would trigger. So, all right. So that's that. I'm gonna get off my soapbox, but that's my belief. I want to follow that trend the best way that I can and allow that trend to work in my favor. And then I showed you the Dow. The Dow also reversed off our little 15-minute level, moving its way back up. Here, I think, is a kind of a pivotal little spot, though, where we're sitting now, because it's an old area of resistance, old resistance, new support. And so I'd be okay if you want to take a breakout on here with a stop just below this area here, because we are getting, that is, you've got to give yourself enough room. But that definitely was resistance, 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 and then support. So, all right. So those are our levels for the day when I take a look at my current at my commodity markets. Now, the reason that I want to look at my my commodity markets is because the key with these markets, these equity markets, because these equity markets are going to drive a large part of what happens everywhere else. And let me throw this grid up real quick. All right. So let's move over to commodities. So when I look at my commodities, we're going to start with our crude oil markets. So starting with crude oil, we had looked at this one yesterday, and we identified what I thought to be a pretty good little level, pretty good little area here, 15-minute zone. And I'm okay with a level like this when price comes into it and we get a quick stop out. That's what that was. So yesterday was a pretty good move for the Russell breakout, for the S&P breakout, but the crude oil one just didn't come to fruition. We were above there, and it didn't give us any clean entry. And so you got a clean entry, but then you got a very quick stop out on that position. Small level, small zone. Confirmation level never got triggered. We touched it, but never got triggered. So I got to remove that level as well. And then we came back down to the demand zone and got a little bit of a move off. Now, in this reality, it was, once again, rough time of the day. But if you got into this one and you moved your stop to break even, you may have run it up a little bit in the overnight, and it wound up being a pretty good move off. All in all, from where we looked at the markets yesterday morning to where they are right now, we've seen a move of just a few ticks. That's really what it comes down to, right? Lots of stuff up, lots of stuff down, some move back up, and then we're basically back where we started. So when I go to the 1 hour and I look at my 1 hour chart, I'm going to go immediately to a wick over wick area below a pivot high. And these levels, you'll see me draw those levels a lot, right? So that's a wick over wick level below a pivot high formed right at the London Open. That's typically a pretty good zone, and that's 40.05 by 40.21. Stop obviously has to go above the pivot up in here, but that to me is a pretty decent potential reversal. Now, looking at this on an hourly chart, you've got kind of an extreme head and shoulders, right? It really looks a bit like an extreme head and shoulders where you have a shoulder, head, shoulder right in here. And if that's an extreme head and shoulders, which it kind of looks like just a little bit, it's not really a head and shoulders until it broke. So I'm going to get to that in just a second, Liz. So looking at this zone, we definitely see that we are still rising up. Now, let's look at our momentum in that position. Well, in order to do that, let's go to the 4 hour chart. So when I look at the 4 hour chart, right, my momentum in that position hasn't really shifted at all yet. Even when I move that to the RSI, my RSI is not telling me that we're oversold or any of that, overbought in any of that scenario, nor that we are oversold. And we're in a pretty strong upward trend. We're kind of in between. Even if you use the 60-40 RSI, which I know a lot of people do, we're still in between that number as well. So Liz is 100% correct. That is a good supply level, but it's a supply level that's going against the big picture trend. So what does that mean we have to do with this supply level? That's a very good way to think about it, Stephen. It's Quasimodo's shoulders. Well, we'd have to take and make this a confirmation entry, right? Because it's against the trend direction, I'd have to be a confirmation entry. Now, if you want to be aggressive and you say, Chuck, that's a good level, I want to be aggressive, I do see that there's potential weakness. We've got a hurricane in the Gulf. What's that going to do? I think price is going to go down. I don't know that that's going to happen, but that could give you a reason to get short on the limit. I like the confirmation entry better, so I'm actually going to set an alert right here. I'm going to set an alert right there. And the reason I set an alert is because I don't want to tie up buying power, right? I don't want to tie up any buying power. I want to be able just to set this trade up. Trent, it's already touched on a 15-minute. Yeah, it has. It definitely has, with this little 15-minute level coming back into it right there, which is definitely another reason to go confirmation on that side. All right, gold. So looking at our gold levels yesterday. So yesterday we talked about the fact that in order for us to get a truly good breakout, we would need basing inside this box, right? And that's why we drew the box, because the box tells me, did I get small, tight range candles at this area? What do you think? Did we get small, tight range candles at this level? No, we didn't. So there was no reason to take any breakouts. We didn't get any of those small basing tight range candles like we talked about. Matter of fact, we got expanded range candles, which are not what we're looking for. Okay. Now the level still valid, could still give us one. Things are priced in. Yeah, there is that too. We did have a little bit of a move off of this hourly level here. We hit it. We moved away a little bit. We came back into it again. We moved away about a 1-to-1, and that's when it came down. Now, this then became a very clean flip. This is a really good picture of price becoming a flip level. So price flipped. Old demand acted as new supply and reversed off of that zone. So an interesting little reversal off that zone with price coming down into here. We did come and touch the 15-minute zone and got a very strong move away. For those of you that happen to be, trading live that time of the day, that's right there around the Australian market open. So Globex session, not the best time of the day, but you certainly had an area to run that higher off that 15-minute level. If I go to the 4-hour, my 4-hour trend, I do have a lower low, right? We got lower than this swing low. And I don't technically have a lower swing high, but I do believe that the better probability is that we're going to create a lower swing high here. And so very much like we see in crude oil, there's a little wick over wick area here in the hourly chart where we could see a reversal. Go to the 15-minute and let's look and see if there's anything that's very clean. You got a pretty clean pivot right here. But I'm okay, really, if you want to go candle to candle short on any of these levels. Now, this is certainly not a printed candle as of yet. Not a printed candle because we are only 23 minutes into our 7 o'clock candle. But you can go with a candle to candle short off of this level, especially if it gets up a bit higher, up around 1895, 1897. That's where it'd be a really good candle to candle short. But remember, if I'm going to go candle to candle, I need a candle to candle a candlestick reversal pattern in order to justify that. Some sort of a doji or a shooting star or some sort of a candlestick reversal pattern to justify that candle to candle move. Nat gas, let me move to the X contract. Hopefully we won't have to do this too much longer. That gap will fall off. On our X contract, we did get a touch and move away on the hourly chart of about a 1-to-1 move. And then, 1, 2, 3, 4, 5. If you didn't take any profits, about 6 candles later, you did get an opportunity to get out right in the zone before it hit the stop out point, which was about 3 candles after that. So it gave you an opportunity to get out, even to take a bit of a profit from it. Not a huge profit, but on a 4-hour chart now, it's just yuck, right? To me, that's just a lot of yuck. And so I'm not going to add a level to this one today. I think that we're in between areas. I think that it's kind of messy, and so I'm going to allow a trend to develop before I try to find a trade in the NG. Looking at copper. So in copper, we also didn't quite get our. Oh, look at this. We're running up hard now, coming close to our area of potential supply. We didn't get the tight basing that we wanted right in here. Although we did just get a little bit of basing down here, and the breakout is continuing to run. So as that breakout is running, you've got a potential area of supply up in here. I think that's actually still a pretty clean supply zone. When I look at it on the 4-hour, that 4-hour level tells me that we have swing high, swing low, swing high. I've got higher swing highs and higher swing lows, technically. So be a bit cautious of that zone. You might want to wait till we get in just a little bit and then take it on the way out. But overall, I think that's a pretty decent supply. Your target, in my mind, would be right here at 3. So use the whole round number as a target if you take that short. All right. Soy, we had a couple of potential areas here for breakout. We didn't get any of the basing on either one of those areas. So the retest would be what's fully in play. And so now let's take a look at this 1045 by 1043 for a potential retest on a pullback of an hourly chart. In corn, we touched our supply level, got a little move away, and now we're back into it a second time. When we see that we touched a supply level, we moved away, and now we're into it a second time, what do we look for? Yeah, we look for breakouts, right? We look for breakouts. And that would be if we get a pullback, especially down into this region here, a little bit of basing, then you've got a breakout potential. Let's look at wheat real quick. Yep, Joe, I'll look at wheat for you. So looking at wheat, we did get a bit of a breakout on the wheat number, and then it pulled back. But if you move your stop to break even, you're still running. If you didn't get in, no big deal. Look for a retest. And the retest area that I would look for, the first one is this one right here. That, I think, is your best retest area. You do have this level here, but we've actually already touched that and moved off of it. So I'm going to look to the level below at 585 by 583. It's a strong bullish upward trend that is continuing inside of wheat. All right. And then somebody asked to look at bean oil. So looking at bean oil, we did have this area of supply on the hourly chart the other day, which we hit and got a very strong move away. But we're coming back up to it again. And so when I see something like that, what I'm going to then do is use that as a potential breakout trade. And that's what I see inside of bean oil as a potential for a breakout trade. If we don't get the breakout, or if we get the breakout, I would then also, I would agree with that, Liz. I would then look for a retest. If we don't get the breakout and price falls back, look for this area here as a potential to get long. Seems like there's a lot of plays today in those commodities, and they're all setting up at slightly different areas and slightly different levels. So let me share this grid. All right. And then let's talk about currencies. Do we have to, though? I mean, really, do we have to talk about currencies? No. We had the 10-year note yesterday, which on our tweet gave us a big pop, right? And it popped through that little area of supply that we had looked at. Now, that was a pretty good little area of supply on a 15-minute chart, but earlier in the day, we had come close to getting into that level and were unable to do so. And so you may or may not have taken this based upon the confirmation trade. If you did take it, instantaneous stop out as price just rocketed straight through it on a tweet. And so if we see no stimulus, that would be people would, if you see no stimulus, you would anticipate, okay, well, the bonds may get a little bit of a boost there. But they didn't get a boost for very long, and it sold down overnight. Matter of fact, you think the bonds would get a much bigger boost. And so let's just keep an eye on them for today. When I look at the daily chart, longer term, right, going all the way back since April, with our first round of stimulus, the bonds have really been very tight ranged. Okay. This really tight range. And so I'm just not going to add anything extra to this today. When I look at this on the 1 hour, if we get basing, we may get an opportunity in there. Technically, this area of supply is pretty clean. So you could have this area as well, but we're just not seeing the strength you'd anticipate with the stimulus being canceled, right? You'd anticipate with the stimulus being canceled a lot more strength. In the Aussie, so in our Aussie level, we looked at this wick over wick supply zone, got a very nice move away. That was actually a great setup yesterday. Got a really nice move away from that wick over wick area of supply. Wound up working for about a 5-to-1 level. So that was a good one if you guys were able to get that one. I'm going to remove that zone at this point. When I look at the 4 hour, we can see that our 4 hour, we put in that, what we called that a Batman cowl yesterday. And we came back up and retested the wick over wick, and that was where our move down came on our little Batman cowl move. Good, Ryan. Love to hear that. On our 15-minute, I'm going to look to this area here as our next potential for a breakdown. Now, I'm using a 15-minute for a breakdown because I want to minimize my overall exposure on that position. It'll be a smaller risk, and so if I get stopped out, I get stopped out quickly. The euros, the euro level. Now, this one, this was a pain in the butt. We had looked at this yesterday and said, if you're more aggressive and you want to take one right away, you do have a little bit of a move here, and that's what happened. We got a little move, but a little move indeed, right? So 1, 2, 3, 4, 5, and on our 6th candle, kapowie! Came to our 15-minute zone, and in our 15-minute zone, we hit it, moved away, hit it a bit again, moved away, and then it just kind of went nowhere. And so both of our levels were kind of meh yesterday in the euro. Maybe you made a little money on them, but in reality, you're probably at break even on those levels if you took them both, only because you didn't get a really great move on either one of those zones. On our 4 hour, this is why we manage these positions. On our 4 hour, our trend is definitely still up. No question about it. Trend is still up. If I throw my momentum indicator on here, my momentum indicator is giving me the same lows, slightly higher lows. So my momentum indicator is telling me, hey, listen, trend's still up, but pay attention, right? Trend is still up, but pay attention. Stay vigilant, because I think that I'm tired. I think I'm exhausted. I think I'm ready to reverse. And with the trend telling me that, I'm going to pay attention to see if the speed candle from yesterday is something that we pay attention to. Now, remember, why would the currencies have gone down on no stimulus? Because no stimulus means a stronger dollar, right? No stimulus means a stronger dollar. A stronger dollar means our other currencies get weaker. And so keep an eye on that for an overnight, a level, not overnight, for an intraday opportunity if price comes into there. Now, I will say, I don't think that we're going to retrace all the way back down to here. But you do have a good little area down here. Stop obviously has to go below the pivot if we make it back to that region. Same picture on the Canadian dollar. Damn tweets. The tweet pushed us right down below what I thought would have been a pretty good area of demand. Now, unable to hold on to there. Oh, are you talking about the euro? Yeah, so on that euro, ideally you'd want you to be a confirmation level in there. If you're more aggressive, Joe, I'm okay with you getting in, but I would get in at maybe half your normal position size. because it's a retracement of a speed candle. I'm okay if you want to get in, but just get in at maybe half your normal position size so that you take a little bit less exposure. Canadian dollar, we talked about that level there that just hammered right through. 4-hour trend on here is not giving me a whole lot of signal one way or the other. I've got technically at higher swing highs, but I've got lower swing lows, and so I'm going to leave the Canadian dollar out. No real market to look at today in the Canadian dollar. Inside the Great British Pound. So the pound yesterday did come into the hourly level. 1, 2, 3, 4, 5, 6 candles later, we were sitting right here and had gone nowhere. But that gives you an opportunity to take your stop and move it to break even. And you did wind up getting a little move away from that zone as we did come into the hourly level on this. I think that your next level in the pound that's better is this one up here. This itty bitty, teeny weeny wick over wiki. It's a small level, but I think that is still a level in place. Yeah, Murray, Corey and I argue about that regularly. I guess we should probably come to a better consensus on that. I'm okay changing position sizes to when I'm being more speculative. I'm okay going half size position, half risk, but we argue about that one on the regular. But I think that speaks a little bit to the fact that everyone's going to have a little bit of their own style and what they do. I'm also, by the way, willing to take a heck of a lot more risk because there's times that I will load up on a position that he's like, nope, we don't load up. And so it's just different styles. All right, and then the last one here, Japanese yen. Our Japanese yen level, we did have a zone here, and then in the overnight, we came down right through it. I mean, absolutely stopped on this one. I will say that we got a little bit of basing here in front of the level, and the basing we got in front of the level, how do we know what's too close? Well, we measure what's the risk of this level. Let's call that our risk. So right there, we were at about a 1-to-1 reward to risk that off that move down. Now, there's a chance that we get a rally back up through here, and if we do, the origin of that move, which was the basing before the level, becomes a potential for a reversal to come back down. If I look at this on the 4-hour, because we broke below there, that tells me that there's a chance that we're going to continue to retest this and head lower. And I think you could head a lot lower. This could actually make for a really good swing trade. And this is where it might make sense to look at actual currency pairs. If you want to take advantage of those longer running moves, you might want to take the currency pair in lieu of the currency future. Speaking of currency pairs versus currency futures, on the 15th of October, next Thursday, Justin Krebs is going to do a session on currency pairs versus currency futures. If you've not registered for the Trader Summit, please do so today. All right, well, that's all I have for today, everybody. Tomorrow, remember, we're not going to be on YouTube. Tomorrow is going to be our live trade room inside of the Traders Army room. So if you guys have any questions between now and then, feel free to send me an email. I'm going to try to keep some updates going throughout the day today. I know our updates have been a little bit lagging lately. We've got a lot of changeovers going, so I will do my best to get some more updates in throughout the day today. So you guys just check the website for updates on today's trades. So hope you guys have an awesome day. I really, really genuinely appreciate you all joining us, and I'll talk to you soon.